Hi everyone, it's Catherine, and it's been a while since I've made any videos talking about the stock market, probably almost a year. But I have been in the stock market, I have been active, I have been going through this tumultuous time when the stock market crashed and sat on it, and now we're in the period of COVID, and this is my home studio today because there's people at my house, meaning family members, not like people visiting, but I just can't find a quiet room. So I decided to come over to a shady spot and film this little episode in my car today. We might get a guest appearance. My dog is in the back. I just took him for a little walk outside in an empty parking lot. So anyway, but today I wanted to do a video. There's a lot of videos on the internet about success and buy this and buy that, and I've never really come across too many stories of how the market gave someone a spanking and taught them an expensive lesson. So I'm here today to tell you about my expensive lesson that I just had this week, and I was a little surprised. I mean, obviously, when you buy a company and you don't do your homework and the company starts to falter and the stock price declines and then it never makes it up to what you bought in, you sell and you take a loss. Okay, we all know that you can lose your shirt that way when something happens to the company. I also had been playing with a 3 times bear Direxion ETF called Tech S. There's a Tech L, TECL, and a Tech S, TECS. Tech L is the bear, so it goes up 3 times when the market is going up. That's its goal. And the bear comes down 3 times, supposedly. It's a leveraged ETF. And people do some swing trading, day trading with those. I don't think people, in their prospectus, it talks about they're not really ones that you're supposed to hold. I'm still learning about that. But anyway, so I had played Tech L a few times, and, buy 1 or 2 shares. It was around $125. It would swing up to like 140. I would sell it. I'd buy back in when it dipped. This was last year. And then it got out of my price range. It went up into the 300s, and that's out of my price range because I'm still playing around. So then I started watching the Tech S side because it was only selling around $15. And then as the market kept going up, that one is going down. It goes down when the market goes up and up when the market goes down. So when we had that big crash and the big sell-off, what used to be around $15 was around $8. And I bought into it. I bought some shares because it had gotten down to $8 and it was starting to go up a little bit. So I bought in and I was doing some swing trades. I'd buy at 8 and sell at 10, make a couple dollars. I don't buy many shares because I don't have a lot of money. So I would buy like 10 shares. I know it's not a lot, but I was trying to teach myself stuff. Well, I also have been reading books like crazy. I started reading some books on how to sell covered calls. Now, I knew never to do margin. I mean, I'm not telling you never to do margin, and nothing that I'm doing is giving you investment advice. You got to do your own thing. I'm not a broker. I'm not licensed. I just want you to experience what I'm experiencing. But talking to my dad, who told me things like, just when you think you have the market figured out, it will come in and teach you a lesson. Well, guess what? This week it taught me a lesson. So like I said, I was buying Tech S, and I was reading a book about learning how to do covered calls. Selling covered calls. Covered means you own the stock. Naked means you are placing orders on stock you don't own, and if the call gets, I forget the term at the moment, gets picked up or gets executed, you have to go out and get the stock so you can give it to the person that bought or sold you. I don't know. I'm not even going to get into explaining it. You'll have to do some reading. But selling a covered call meant that I had to go buy at least 100 shares of Tech S. So I bought them at $8. And then I look at the options chain. So that means I look at selling anywhere from 1 week to further weeks out. So I had chosen 3 weeks out to sell it at a strike price of $8, what I paid for it, so I wouldn't get any money on the equity. And I sold it for 30 cents. So it's 30 cents times 100 shares. So I got $30 for free, and not free, but I got in my account. And then in 3 weeks, if that stock was at $8, that 100 shares would get taken away and given to the buyer of that call, if I explained that correctly. It's complicated. Or for those of you that are laughing at me because you already knew all this stuff and you know where this story might be going. Anyway, so I had, and I was doing really good. The stock was fluctuating between $8 and $9 because the market was tanking. And then the market started going back up. It was on that little revival of the market. And Tech S got down to $7. So the week that my call, March 27th, came due, my stock price was not $8. So the person did not exercise his option. He didn't want my shares. So I was left with my own shares. So I still had $100 of this stock called Tech S at $100 a share. So my dad's like, well, you can either sell it outright or you can write another call, whatever you want to do, but write it really shortly because this market, you don't know where it's going to go and you want to get this off your hands. You don't want to hold on to this leveraged 3 times bear account because you just don't know what the market's going to do. So it had gone down to like $7. It was down near $6. So I couldn't really find a good covered call to sell. And I didn't want to sell my stock and lose $2 a share because that would be $200 on my 100 shares. So I sat on it. Well, the market has been going up and down. There's been volatility, but Tech S has not been going up like in a 3 times type of way it used to when the market has been going down. So daggone it if it didn't get down below $4 a share. So now I've lost half my money. What I originally bought for $800 is now worth $400. So I'm like, well, maybe I'll just sit on it. This is still a volatile market. We still don't know what's going on. It goes up, it comes down. I mean, last week it was down 1,200, not last week, just this week, I think at the top of the week, down 1,200 points. And Tech S just did not move up like it had been in the past. So even though I had been watching this stock for a year, it wasn't really performing the way that it had in the past. And I did not do my due diligence. I wasn't really aware of all the holdings that it had within it. I did loose diligence. I thought I knew what was going on. Mistake number 1. So anyway, mistake number 2 was not investigating like current things on it. Well, I went to bed on April 21st or 22nd. It was either Tuesday or Wednesday night. I went to bed. Tech S is trading at like $3.82. I wake up in the middle of the night, and I do this often. I'll look at the futures, and futures it was moving sideways. And I looked at Tech S, and it said Tech S was worth $38. I was like, oh my God, I think I'm sleepy. I think I need to get my glasses. I don't know what's going on. It said $38. So I go back to bed and I get up and it still says it. And I was looking on the CNBC app, so I thought there was a typo. So I go on my Robinhood account. It says $38. Or no, I can't find, because I held like 8 shares of it to trade here and there. I can't find my shares. I was like, what the heck? And then I go on my TD Ameritrade account and it says 10 shares, $38 a share. I was like, WTF? Oh my God. I'm like, what the heck? I'm like, there's been some kind of reverse split. So I started looking and I did the math. I had 100 shares and now I had 10. That is a reverse split 1 for 10. But I had 8 shares in my Robinhood account and I had no information whatsoever I'm like, what the heck? So what do? I call my dad. I'm like, oh my God, Dad, I think TechS had a reverse split. So he helped me do some homework because I Googled reverse split, TechS. I couldn't find anything. And he had to do some deep investigating. And my dad, who's been in the market for 50 years, knew where to go. So he went out and he returned with an article. I guess Direxion had about 10 ETFs that had reverse splits that night. They had anywhere from, I guess JNUG was one of the ETFs that split too, because when I looked at the Robinhood forum on Facebook, everybody was complaining, oh my God, where'd my stuff go? And my dad said, well, probably somewhere in the agreement or whatever it is that they write up, he said probably fractional shares, which is what I had in Robinhood. I had 8, I didn't have 10, so it didn't qualify for 1 share, a 1 for 10 split. He said your 8 shares probably got liquidated, which was fine because I bought those. My average in with my 8 shares was $4.98, and they got sold off at like $3.80 or $3.90. I can't remember which. So whatever, I didn't lose that much on that. But I still have these 10 shares in my TD Ameritrade, which are worth like $400, and I paid $800. So I got a $400 if I sell it right now. Big spanking lesson. So I thought you only did reverse splits when it got down near $1 and under. Well, I guess they had gotten a Wells notice, I think is what it's called, that they had to get the money back up. And I had seen in the past on TechS that at one point it had been up in the 30s and 40s, and then it just kept going down. And I thought that's maybe because the market had been going up for so many years. I don't know. So again, I'm a newbie. This is a newbie, expensive mistake. I'm just putting it out here because, you know, I see all these people that make videos and they do so good. I want you to know that if it were so easy to make money, everybody would be doing it. But I don't want you not to go out and make money or learn about the stock market, because I believe if you continue to educate yourself, it is a very good investment. And the other thing is my good quality big cap companies that pay dividends, that have been paying dividends for a long time. Yes, at one point my account was 27% up, and when this big crash just occurred, my stocks went as low as 27% down. And it's crazy watching your money just like tick off, and then I was in the negative on paper. But I said, you know what do I own? Has something happened to these companies? No, it's just a product of their environment right now. Everything is still there, and I feel ultimately, going through looking at their fundamentals, that they will recover. And a lot of them have recovered. I'm not as down anymore. I think I'm only like 10% down right now. A lot of my stocks have recovered. Some of the financial ones and some of those aren't up back to where they were when we had that crash, but I'm not worried. I'm just sitting on them on paper because I don't see anything wrong with the company. But the one that I was rolling and playing and learning how to do covered calls on spanked me in the booty and taught me an educational lesson. So yeah, I got schooled and I paid for that lesson. So anyway, I just wanted to tell you that story. I hope you enjoy it. I hope you learn from it. I'm not a licensed investor. Do not take advice from me, obviously. The only advice I'll say is go educate yourself. Read. Talk to your peers around you and learn. I'm still buying stocks. I just bought some shares of a REIT called ACC. They do campus housing. And I bought some more of, what else did I buy the other day? I actually did buy a couple more Exxon shares to lower my average. I believe in them. Again, I'm not giving you advice, but I believe in them, and I'm happy with everything I bought. So anyway, my little partner in crime did not make an appearance. So, hey, Frankie Doodles, say hi. Say hi there. Yeah, he went on a walk. So anyway, all right, guys, this is my new video. push like and subscribe to my channel. I'm going to be making more. I've got other videos as well. So enjoy, and I hope your family's safe, and please wear your mask. I have my mask every time I go out. I have my mask. I have my, where is it? Rubbing alcohol. I have my cleansing wipes for my steering wheel and whatnot. Staying safe. So love you guys. See you soon. Bye.